5 insurance mistakes to avoid. And still save money. Stay away from these entanglements while purchasing auto, home, flood and leaseholders insurance. Setting aside cash feels quite a bit better. Also, looking while you're searching for insurance inclusion is an incredible method for getting it done. Be that as it may, basically diminishing your inclusion or dropping significant inclusions out. And out is like eating regimen without practice, zeroed in on numbers, as opposed to on results. Try not to gamble with winding up hazardously underinsured, and on the snare for a lot greater bills in case of a debacle. Following are the 5 generally normal auto, home, flood and leaseholders insurance botches individuals make, alongside ideas to deflect those entanglements while as yet setting aside cash. We call them better ways of saving. 1. Protecting a permanent place to stay for its land esteem instead of for the expense of revamping. Whenever land costs go down, a few property holders might figure they can decrease how much insurance on their home. In any case, insurance is intended to take care of the expense of reconstructing, not the business cost of the home. You ought to ensure that you have sufficient inclusion to totally modify your home and supplant your assets. Come what may, the housing market is doing. A superior method for saving: raise your deductible. An increment from $500 to $1,000 could set aside to 25% on your top-notch installments. 2. Choosing an insurance organization by cost alone. Picking an organization with serious prices is significant. Yet, be certain the backup plan you pick is monetarily sound and gives great client support. A superior method for saving. Check the monetary soundness of an organization with autonomous rating offices, a few notable ones, AM Best, Moody's. And get some information about their encounters with backup plans. Select an insurance organization that will answer your necessities and handle guarantees reasonably and effectively. 3. Dropping flood insurance. Harm from flooding isn't covered under standard property holders and tenants insurance arrangements. Inclusion is accessible from the National Flood Insurance Program, NFIP, as well as from some confidential insurance organizations. You may not know you're in danger of flooding, but rather remember that 25% of all flood misfortunes happen in okay regions. Besides, yearly weather conditions, spring overflow from softening winter snows, for instance, can cause flooding. A superior method for saving: before buying a home, check with NFIP to decide if a property is arranged in a flood zone. Provided that this is true, you might need to think about a safer region. Assuming you are now living in an assigned flood zone, take a gander at moderation endeavors that can lessen your gamble of flood harm, and think about buying flood insurance. Extra data on flood insurance can be found at www.floodsmart.gov. 4. Just buying the legitimately required measure of obligation for your vehicle. The base is only that, the least you can pull off by regulation. So purchasing just the base measure of risk implies, you are probably going to pay more cash based later. Furthermore, assuming you are sued, those expenses can endanger your monetary prosperity. A superior method for saving: consider dropping impact as well as extensive inclusion on more seasoned vehicles worth under $1,000. The insurance business and customer bunches by and large suggest at least $100,000 of real injury security per individual and $300,000 per mishap. 5. Forgetting to purchase leaseholders insurance. A leaseholders insurance strategy covers your assets and extra everyday costs in the event that you need to move out because of a safeguarded debacle, like a fire or typhoon. Similarly significant, it gives obligation security in the occasion somebody is harmed in your home and chooses to sue. A superior method for saving: look into multi-strategy limits. Purchasing a few arrangements with a similar backup plan, like tenants, auto, and life will by and large give investment funds. Anyways, thank you for watching this video. Don't forget to like and subscribe, and see you on the next video.